let's hop over today's chart breakdown where we could have taken this nice 15-minute daily model in between here. Okay, very clean one, the only trade that was valid right now. Let's just delete all of this noise and let's focus. Let's go to the daily. And for me, since we just took out major point of liquidity here, this candle closed below yesterday, so lower prices. Currently we are still bearish in here, so we are not candle closing accordingly. We have news at 9 a.m. so 9 p.m. so hopefully, okay, these news will push market higher. If not, then that's also okay, but then we will have a nice candle close where you can then target this here. You also have internal liquidity here. You also have this here, which is a nice gap with this rejection block here. Okay, you also have this gap and also this bigger gap, but still could be the reversal from there on. Reversal for filling this or even just this for tomorrow to mitigate 50% or around the 50% level. Consolidate, open on next week. Tuesday will form the low and then push higher. Something like this, as mentioned in the video before. But we just stick to the daily model. We turtle soup this here. Okay. You draw a range around it. You have here yesterday, today, you form a small consolidation, you falsely induce. If you went for longs here, that's perfectly fine, okay, happens. I also went for longs here, which was my first stop loss today, here, and right now I took some partials and the position is still running, okay, accordingly to the candle close. So I will close the position if we candle close bearish. If we candle close around here, I will still leave the position running to 50% to this big ass imbalance here, okay, so somewhere in between here. But you see, at the specific timing here, nicely you could have had a 1 a.m. or in this case a nice Asia model, which did not occur. Okay, you had a nice re-entry and then market came to 50% of Asia, but sadly not above here. Then you dumped, okay, so you simply just push lower. Also not at 2 a.m. so this was just a normal push by markets. And then I've seen this here, the high which broke the low, gets candle closed, leaving you with these nice fair value gaps here. Personally, I entered on this range mitigation here, on this wick, like this. Stop loss below this low, and then target the high overall from the daily model, like this, 1 to 6. Currently took partials above this here or around this area, since you have this nice key area here where you also see market came into and rejected immediately, giving you a second entry possibility. And then I also, since I entered here and I've missed a re-entry possibility, I thought that market will come back all the way to this breaker here. Well, in this case we are doing that right now, but I wanted to see it mitigate this area here, okay, which we did not do before here, before this pullback. So I re-entered on this wick. Okay, so I re-entered here at my stop loss, or I think I re-entered after the candle closed, and my stop loss below this candle. And that's the one trade that you've seen right now, which with 20 bucks, where I simply moved stop profit or stop break even, where I simply moved stop loss to break even, sorry. We also see this here, the low which broke the high. In this case, this was candle close by this one. So I thought this could be protected. Overall, we just pulled back a little. And according to the candle close, we will have a look what markets are doing. Also, if we look at 230, okay, which is 8:30 in this time, since there's 6 hours difference. Yeah, 14:30, yeah, exactly. These news were bearish. If you look at Dixie, they were bullish. Why? Well, 217,000 was actual here. The unemployment claims basically mean how many people have claimed their unemployment claims, which is, well, not good because you don't want unemployed people. You want them to work a 9 to 5. Yeah, to work for the system. But anyway, it was 221,000. The forecast said 242,000. In this case, which was absolutely not true. I imagined something that we will have more unemployment or something between around this year, which may be an increase, but well, in this case with a decrease, which is positive, okay? We have less unemployment people or unemployed people, which skyrocketed market because that's good for the dollar, that's good for the economy. You then also mitigate this year, which we pushed simply, I think, because these were small news, to use it to push into a key area intraday wise. And yes, news don't look at intraday or in financial institutions, but still they target liquidity areas. And in this case, the only liquidity area which remains was this here, this range, which is unmitigated with a lot of positions in between here. And then you can look for buys above the main liquidity, which is Asia, London, whatever. Okay, that's simply it. That's how you read the news of today. And right now I'm just looking at the candle closes. You also have no nice 4-hour model, only the 5 AM model if you wanted to use this one. Okay, you also mitigated this perfectly right now, and you are also in this nice FVG here. So you could already cap off the week with this. Personally, I would love to see a total soup of this candle. Well, will not occur because this is the FVG candle this year. In this case, market is nothing. This is all mitigated. The unmitigated things are down here. In EU, that's just this big ass thingy. Maybe we open, maybe we total soup, maybe we don't, I don't know. We also just complete this mitigation. But if we go lower to the M5 5 AM model, you can see here the high. Is this the high which broke the low? Nope. Okay, then you see the high which broke the low, needs to get candle close. In this case, you get a new high which broke the low. Okay, this high breaks this low. Also, if you want, you can use this one, which is kind of the same. So you delete this one. This is how a CISD forms. You reject the low, even though you candle close below it, but still nice. You then induce above an high with a lot of candles, like most likely 3 to 5, leaving you with a big ass range, leaving you with a fair value gap, which got perfectly hit, which I would have not used since this is, well, kind of a critical area. I would have used this whole swing point here, which is still not much, because if you enter like this, that's 20 pips around. Okay, yeah, that's 20 pips. If you don't like the 20 pip trade, well, sadly, no trades for you. If you target this, you already get a 1 to 2.8. If you target the overall situations here, you could have gotten a 1 to 6 around, I think. Yes, 1 to 6.5. Okay, that's simply the trade model here. That's simply for today. We also had a 6 AM model, so you could have potentially grabbed even lower entries. Okay, in between here, where you see you also get a nice lower entry, where you have the high which broke the low. Okay, 6 AM, which is here. Then you see the high which broke the low is this one. You candle close above this here, you then can enter immediately, which is here, and then move the stop loss below the swing low, or this one if you want. I would have used this one since you've seen this, everything is mitigated, and then you would have gotten a nicer risk to reward. Okay, a 1 to 10 all the way up to Asia. Very nice. That's simply it for today, and backtest, and most important, observe. Right now we have news pushing price lower, I think not much, just in this area, and then coming higher. That's simply it. Enjoy, observe, respond, adapt to the charts.